We're live. Market recap live, October 14th, 2022. As usual, we're going to talk about what's happened in the marketplace, hash it out, and then we're going to move on. Thanks for everyone that's been watching the most recent market recaps. We've done it 3 weeks in a row. I appreciate you tuning in. Again, this is live. This is unedited. I'm not cutting this up afterwards. We're just going. So have some patience. This is going to be an interesting one today. This week, there have been some big topics, one thing in the courtroom that happened that was really interesting, but as usual, the markets are unpredictable. But let's first start with, let's just start with the markets. Let's just talk about it because this is something in my financial planning where the markets are of the least concern because they're completely unpredictable in the short term. We have no idea what's going to happen from day to day. No one can guess. Day traders don't do a good job. Traditional investors underperform the traditional market. But I want to show you a couple things. The way different types of markets and investments can operate differently in environments like this. And it's funny, one of these segments of the marketplace usually makes headlines. So let me show it to you. Let me show you. I'm going to share my screen. Hang with me here. We're going to share this guy right here. I'm going to maximize it. Here we are. Okay, so this is Koyfin. This is something I use to help show clients how markets have been performing. It's kind of interesting. It's really cool software. It does cost some cheddar. So you can get it. It's available for people like you to get, but it costs some cheddar. So here's what I want to show you. If you can see this, that's why I made it as big as I can. In fact, let me get my face out of here. No, I'll keep my face. So here's where we're at. The purple and the blue. The blue is the S&P 500 index, what everybody mimics and tracks. It's basically accumulation of the 500 biggest publicly traded companies in our economy. Plus, there's a couple extra in there, like there's 2 share classes of Berkshire Hathaway and stuff like that. So it's like 505. But essentially, the S&P 500. The purple is the total market. This is the Vanguard Total Stock Market ETF, which has like 3,500 securities. So the S&P 500 is large capitalization, the biggest companies. Then there's kind of mid capitalizations, and then there's smaller capitalizations. The large, mid, and small just is how much market cap the company has, and you get the market cap by multiplying outstanding shares times the share price. So small cap, a smaller company, usually companies you never heard of. The VTI includes some mid cap and small cap companies. And you can see down here, year to date, blue and purple are struggling. But we've known that down 20 to 25% this year. And it's kind of holding steady. We'll see what happens. You can see a couple different things from this chart, though. I've incorporated BND, which is the total bond market index, which is a broad swath of the bond market. I think that's got 6,000 different bonds in there. You can see how it's down only 15%. Now, I know you're going to say bonds, that seems like a lot. Well, it's a risk management play. If you were all equities or large cap or big equities, you'd be down 23 or 24%. If you were in, let's say, QQQ, all tech, you'd be down 33%. So there's a difference. So bonds, yeah, they're down, but they're not down as far. Then there's VTV. Anybody know what VTV is? Well, I'll just tell you. It's value, Vanguard value. So it's displayed a bunch of value type holdings. Now, when it comes to stocks, there could be growth, there could be value, and a variety of different things. But value has companies that are usually a little bit more steady Eddie, like we see here. It's only down 12%. So different types of investments perform differently. So when we look at the market over the course of a week, 5 days. Hang on. Real time. We're doing this in real time. There we go. 5 days. You can see the past week, VTV's actually gone up. VOO is only down a little less than 1%. VTI is a little more than 1%. Bonds are down 1%. Why is that? Because interest rates rise. When interest rates rise, bond prices fall. And then QQQ is down 2%. QQQ is made up of a lot of tech companies. And in a rising interest rate environment, tech companies really struggle because borrowing money, it costs a lot more. So you can see how different investments perform differently. One thing I want to show you, this is going to be interesting. This is 5 days, the past week. This is the market recap. As always, we're going to go out 10 years. If you go out 10 years, you make a lot of money. So past performance is not indicative of future results, but you can see here that if you can weather these storms and you can think long term, it makes what's happening right now irrelevant. If we go back to 5 days, this is unpredictable, man. You can't predict these movements. They don't make any sense. So don't worry about them too much. One thing I want to show you about what's going on is here's how rare S&P 500's violent reversal was after Thursday's inflation report. So it's unpredictable even when good news comes out. For example, the jobs report came out. They were really good. 200,000 jobs were added and the market went down. Inflation came out and it wasn't too bad. The market went down. A lot of this is unpredictable. It's going against the grain a little bit. So you just don't worry about it. Shortly after the open, the S&P 500 index has dropped nearly 4% and then had an epic rally of 5% in a day. That's what I'm talking about. It's unpredictable. Stop pretending like you know what happens from day to day. 4% pre-market rallies 5% when the market opens. That's nonsense. It's just crazy. No one knows. I don't know who's pulling the trigger on the back end or how the trading works with the market makers, but how institutions help fund the trading and market makers and that whole thing on Wall Street is so complex. Don't worry about it. It has nothing to do with us. It's out of our control. Stop trying to predict it. We good? Now we can move on. Next Friday when we meet, we'll talk about it again. I'll tell you what it's been, and we can move on from there. All right, so next up, a huge one. I'm actually going to move something over that's really interesting to read. Hang on a second here. We'll just Google it. Make it easy. All right. Social Security came out. We've all been anticipating this, but now it's official. Social Security, they are increasing benefits 8.7% for 2023. That's a cost of living adjustment. They happen regularly, but this is a big one. They've looked at basically the CPIW. They basically looked at the past 12 months, the consumer price index, and like, man, they've averaged it out. It's still big, 8% or more. So that's what you're getting. So if you're receiving Social Security, first thing, if you're receiving Social Security, your paychecks are going to look a little bit bigger next year, which is good news. If you're not receiving Social Security and you're about to, this will be factored in. But what I want you to know is if you're looking at your statement, which I like people looking at their statement, you go to socialsecurity.gov, you can check out your statement. If you're looking at your statements, don't get too concerned if you don't see any adjustments right away. So don't worry about it too much, but it will account for it over time. This is a big bump, taking into account the rampant rates of inflation that have been affecting Americans all year. Back in 1981, Social Security Administration announced a COLA of 11.2%. I wasn't born yet in 1981. It was 1985. Yay, Michael Jordan, the ones. But I wasn't born yet in 1981. However, if anybody that was older than me, let's say 20 or 30 years, you may have had a house or were about to buy a house. You remember the big interest rates back then. That's the same thing that happened, cost of living adjustments for Social Security recipients. All right, next up. Oh, some big mergers. Check this out. Kroger and Albertsons are in talks of a potential merger. This is crazy. Hang on just a second. I got to yell at my dog. Sorry, my dog was click-clacking around on the hardwood. Kroger and Albertsons are going to merge. I mean, that is a significant merger. Two huge grocers banding together. It's really, it's not crazy to see mergers, but it's crazy to see this big of a merger. I don't even know how it's happening, to be honest with you. I don't even understand why. It's just the American fortune, the growth in free market society, capitalism coming into play, which I don't hate. I'm not going to tell you I hate that. I'm just saying two big firms merging together like this, it just doesn't seem necessary. I bet they have a reason behind it, but it's pretty dang close to being finalized. It sounds like $24.6 billion a deal. Shares of Albertsons jumped more than 11% after reports of the merger. Here's a great example. This is an example of how insider trading could have played out. Let's say you own shares of Albertsons and you heard from someone high up in the company. They dropped you a line before this news was reported, before it was made public, like, hey, man, we're probably merging. Go buy some. That would be insider information that would boost your portfolio of owning Albertsons. However, if you believe the markets are efficient, that's why the markets are unpredictable, because no one would have known Albertsons could have popped 11% until this news came out. That's why you just had to get lucky and guess. No one predicted a buying Albertsons stock over the past year. So it's just a really big move, very interesting. Just going to make your grocery stores maybe change or adapt a little bit. I don't know what it's all going to look like, but man, Kroger stock dropped 2%. Very interesting. It's tax season, so let's move on to taxes. IRS wants to remind taxpayers of upcoming filing extension deadline. So if you filed an extension for your personal tax returns, businesses are already done back in September 15th, but for your personal tax returns, today is the day in theory, but because the 15th lands on a weekend, October 15th is tomorrow, the extension is filed till Monday. So you get until Monday, but I hope you already filed your taxes. But just a reminder, if you haven't filed your taxes, you better get on it. Like, you better call out sick for the rest of the day and go get your stuff taken care of, or you're going to get in trouble. You're going to get some penalties. You can do some free file sites if you need to get some credit. So free file remains open until November 17th for those who need to file their 2021 returns. This includes those who qualify for child tax credit, recovery rebate credit, or earned income tax credit, but haven't yet filed a 2021 tax return to claim them. So if you qualify for some of those credits, you can still get a few more weeks to file to claim those. Let's see what's next. Oh, so some big news. I told you we go to the courts a little bit. I think this is interesting. Now, I'm not diving into any conspiracy theories, but I think that this is a lesson to a lot of people. Let's see where we're at here. Right here. Alex Jones, the well-known Alex Jones, quote-unquote conspiracy theorist. I'm not saying whether he is or isn't, but in this particular case, for Sandy Hook, he has been essentially owes $1 billion against a defamation verdict against him. But here's the deal. It basically seems for $1 billion that he was innocent. He was proven guilty in a court of law with substantial evidence showing this. He has to pay out $1 billion to some victims. Basically, you just can't make stuff up anymore and things of this nature. Let me read a little bit extra. $965 million to numerous families of the 20 children and 6 staff members slain at Sandy Hook and Newton in 2012 for claiming that they were actors who faked the tragedy as part of a government plot. I mean, that's out there. That's out there. And if you say stuff like that, it's such a dramatic tragedy. Here's how I kind of look at it. You just need to be careful about what you're saying in public if you don't have evidence to substantiate those claims. This is making an example of what's to come, kind of like what we talked about last week with Kim Kardashian getting fined by the SEC for over $1 million, almost $2 million. They wanted to set an example here, so just be careful. But I just thought that was interesting for a little bit of this week's market news. That's all for this week. That's some big stuff that's happened this week, kind of 4 or 5 things. We talked about taxes. We talked about the markets, different asset classes, some giant mergers, Alex Jones and fines. That's a good place to be right now. So some harmless plugs. Let me go back to this real quick. So some harmless plugs. Thatcher Taylor, ProPath Financial. Go find me down here at the bottom. It's going to come across the ticker. Here it is. Hang on. October 14th, live. YouTube.com/Thatcher Taylor. Putting a ton of knowledge-based videos to help people garner wealth and build their wealth. I'm trying to give you as many tools and as much knowledge as I can. I'm putting out videos 2 times a week, plus this live recap, so you can get them delivered every week. So this is really valuable for you. You can also go find me, Spotify.com. If you like Spotify or on your Spotify app, search Wealth Programmed Podcast. Wealth Programmed Podcast. I'm putting out podcasts weekly, helping to prepare people for retirement. This most recent one was a little bit about me and my company, ProPath Financial. 3-year birthdays. We've made it this far. Thanks for watching this week's market recap. I'll see you next Friday.